Labour government has now been in power for a couple of months, and it's interesting to consider what might be on the agenda for the financial services sector. In July, the FCA published a call for input, which may well have been one of the first publications directed by Labour policy. The FCA is seeking feedback from the industry on how they can simplify and avoid complexity in retail conduct rules, praising the outcomes-based approach of the Consumer Duty. This echoes an intention for such a call for input included in Labour's Financing Growth Plan for the FS sector, which was first published in January. This shows us that the new government is already putting in place its plans set out in financing growth. So what else does financing growth tell us about what might be on the agenda? Labour has repeatedly confirmed that its goal is to secure growth and productivity in all parts of the country. Financing growth tells us that this will be achieved through the FS sector by scaling regional financial centres. There is also an intention to modernise mutuals, which are located nationwide. We have seen some recent reform to the Building Societies Act, and we anticipate further to modernise the sector and level the playing field. Financing growth suggests that the FS sector has a long way to go to address representation statistics and the gender pay gap, which is said to be significantly greater in financial services than for the broader UK market. Labour has confirmed that they actively support the FCA's proposed guidance on diversity and inclusion for financial services. While the reporting element of the proposals has come under criticism, it is understood that the rules on non-financial misconduct are due imminently, probably in the latter part of this year. Financing growth expresses concerns around London falling behind as a financial sector on the world stage and explains that the UK must work on enhancing competitiveness. The paper talks about setting up a regulatory innovation office, which presumably will do what it says on the tin. There is also an intention to promote the financial services sector outside the UK by expanding agreements with international financial services centres such as Switzerland and Singapore. Labour will also continue to build and enhance the relationship with the EU. Labour also intends to improve people's access to financial services. They've said that they will improve the regulatory framework to reduce fraud and to push forward with regulating the buy now, pay later sector. They will also roll out additional banking hubs across the UK so that people can bank in person and increase the number of UK adults who receive advice from financial advisors. There are also other ideas being considered, such as encouraging longer fixed-rate mortgages and encouraging workplace savings plans. Another flagship policy is working towards achieving net zero, and financing growth suggests that the financial services sector will be key to achieving this through disclosure regimes. For example, by getting firms to publish their carbon footprint and advancing the plans for the UK green taxonomy, although we already have disclosure rules in place in relation to the asset management industry and a general anti-greenwashing rule, which applies to all firms. There is also an intention to partner with the financial services sector to make domestic housing more energy efficient through financing for retrofitting and green mortgages. Labour observes that the UK has led the world in fintech, but that is in danger of slipping behind in innovation. The consumer credit regulation is highlighted as outdated, so we may see some changes in that regard, which are long overdue. Labour also want to encourage the use of AI in financial services, as well as embracing open finance. Labour also proposes a state-backed digital pound, making the UK a global leader in tokenisation, as well as establishing a regulatory sandbox, testing financial products to reach underserved communities. Labour also intends to reinvigorate the capital markets, noting a recent reduction in London listings. There are proposals to encourage pension funds to invest more into capital markets, as well as encouraging retail investment, perhaps by simplifying the ISA rules. Labour's plans for the financial services sector are definitely ambitious, and if all of this is to happen, there is a lot to get on with. No doubt the industry will watch with interest to see how their proposals develop into proper initiatives over the coming years.